What's going on? This is Angie. Welcome back to IFX. So why having a solid strategy matters, okay? So when trading, the goal of any strategy is simple. Finding the best possible entry. So looking at a naked chart can be overwhelming, right? And without a clear plan, you're left guessing when the price might make its next move. What if you could accurately predict the next pullback entry? So let's go about how are we going to really make our pullback entry and how can we predict that entry. So in here, what do we have is that, well, we have pound dollar, okay? And we can tell on October 9th, the market had a nice downwards move, and this is on M5. Exactly, we don't know what is going on higher time frames, but on this video, I'm going to concentrate just more on one time frame and just giving you what are the possible pullback entries, right? So of course we see these beautiful moves in here and we could say, well, yes, they look really nice to sell, right? So how can we actually predict those future sell entries and really make the best move, right? So let's take a look in here. So what we're going to do is we're going to map out the 4-hour pullback zone in order to guide us through potential market movements for the rest of the day. All right, so how do we get the pullback zone? Well, we're going to be using the high and the low of the first close 4-hour candle of the new trading day, okay? So this zone is going to help us anticipate possible pullback opportunities and market behavior throughout the day. All right, so what do we do is, of course, it's already drawn in here, but what you're going to do is you can either go to the 4-hour time frame and you're going to take, of course, you have to make sure they're in a new day, right? So this dotted line on the empty 4 gives me the new day, okay? And you can see that by clicking on Control Y. It's gonna give it to you. And what you're gonna do is you're gonna wait for that 4-hour candle to close. Once it closes, you're going to highlight it for the rest of the day in any color that you want and taking the high and the low, okay? So somewhere around 4 o'clock, right? Because we want to go from 0 to 4. Somewhere around here is when this zone was able to establish. So what are we going to do is we're not going to trade from the beginning of this day onto the 4 o'clock, right? Which is somewhere around here. We have to wait for that candle to close in order to let us know more or less what's going to happen throughout the day, right? And this zone is going to be our pullback zone initially, okay? So very important. So once you draw it, again, my indicator is going to draw it for me automatically once that candle closes. So now we can easily see, oh, price was able to break below it, right below the zone, came back again, and it bounced. It came back closer in here, and then in here it came to touch it back again, and it just kept bouncing off. So this was really great, right? A better vision compared to here of really having nothing to really rely on. Where can we possibly get in the market, right? So by now having this 4-hour pullback zone, it is much clearer that, well, definitely I can start looking for pullback entries. So let's go over a little bit more what this zone is going to do for us. So in the beginning, this zone, when it's created, is going to become a resistance and a support, right? Support at the bottom and resistance. Price may stay inside here for a couple of times. Sometimes it might come out a little bit and then eventually come back in here. So of course we have different market patterns that sometimes is easily to see depending on market trends. So in here, I'm not going to concentrate too much on trends because that's going to be on the next video. But I just want to help you see more or less what kind of pullbacks are we looking for, right? So if price comes out a little bit, well, I'm not looking for a pullback in here. I'm just going to see what's the behavior. Maybe, yes, we can buy and sell within the blue area, right? But it's not a pullback zone only when it comes out gradually, well, drastically, and then comes back closer to here. So once it comes out, like when you see really good, comes out of it to the upside, right? then this becomes a support, and then eventually it's gonna bounce, okay? So the same thing for a buy entry, right? Price can stay gradually in here. If price comes out that you see that, hey, this is a good break right out of it, what we want to see is price to come back in here and to have something like this, right? So it became a resistance once it was able to break. And then we can possibly look for an entry somewhere in the blue zone, right? Sometimes we don't know, depending on how the zone becomes, right? Sometimes it can be really big, sometimes it can be really small. But more or less, we're going to go based on the trend. I'm going to teach you later on how we're going to look for trend entries and how are we going to look for also reversals, because of course the market is not going to trend forever, and yes, we can take advantage of those reversals. So again, be very careful on how much this price comes out of this blue zone, okay? So we can enter when anywhere inside the blue zone. We can buy and we can sell depending if we get any alerts, you know, that we can talk about that also later on. Right now, I just want to show you so you can get an overview of the zones, right? What is this? It is a resistance and support, but once it breaks above it, it becomes a support because price will come in here and bounce, or if it comes out of here, then it can come back here closer and then bounce. So we can never know exactly how much it can reach, right? It can reach up to the middle zone, it can reach only to just right here. You know, that's something that it is hard to predict. So one thing that we use would be the RSI, okay? So like in here, we were able to tell price breakout, came back in here, and then we can use the RSI levels to more or less see if it's a good level to start entering the market. So somewhere in between 60 and 70 or higher, of course, is great. So 60 will be our initial pullback that we can start looking. Like you see in here, it reached up to 60 and then it bounced off, right? So it reached up to 60, but it didn't reach enough to the blue zone. So of course, it has to be a decision that, well, if I am below it, definitely I can sell. You know, I don't know how big of a pullback is going to be, but that's the idea, right? So I also want you to keep in mind is that we always want to sell, right? Once it breaks, we want to sell in here. We always want to, or sell below it, right? Here we can also sell, here I can also sell, or here. I don't want to sell above it because I don't know if it's going to be a fake, you know, that is just going to reach up to the top one. So what we want to do is we want to, you know, buy above this blue zone or at the blue zone or above it. You know, we can also buy somewhere in here, and then we can sell somewhere in here and then somewhere in here or below it. That's what we want to do. We want to buy anywhere in the blue zone to or higher, or we want to sell somewhere in the blue zone or lower, okay? I don't want you to sell in here and I don't want you to buy in here. Why is that? Is because I don't know if it's good, you know, is we're better off selling in here and below it and buying in here and above it. But selling on top doesn't give me a guarantee that it's gonna reach in here and then pull back again to, well, you know, it's not a guarantee. Of course, nothing is a guarantee, but it's much better. So like I'm saying, buying in here would not be good thinking that it's gonna go reach the blue zones. We just have to be extra careful in doing that. All right, so this was one opportunity. Again, we're gonna be using the RSI, you know, if we're going to sell somewhere in the 60s or higher, right, as an initial point. So right here it came in, you know, a couple of times. So this was great pullback zones. So again, you can decide, well, I really wanted to reach to the blue zones, right, as close as that I can. Or you can sell in here, but just know that sometimes the pullback might not be stronger enough, right? Think of it as a rubber band, right? The closer it gets to it, especially after it came out for a long time, the better it is, right? So think about it like that. Now, I want to show you something that I added into the strategy that we can use as well for pullback zones, okay? So we're going to be using the white pullback zone for optimal trade entries. All right, so what is this white pullback? It's going to be a dynamic area, also support and resistance. It's going to be ideal for entries, right? It acts like a magnet, okay? Price go towards it and then it bounces away from it, okay? So this is a white zone. And this is going to be different for every single time frame. So now it's going to be more dynamic, okay? So the blue zone is pretty much the bigger picture, right? Think of it as the bigger picture because it's the same for every single time frame. But now in adding to it, it's going to be the white zone, which is going to be completely different to every single time frame. And this is going to be key when entering and knowing if we're in a strong trend or not, okay, or a reversal. So in here we can tell that price, of course you can't see because it's going to cover the blue zone. So we tell that price broke below the blue zone. Of course this is the same October 9th, the same pound dollar. It came back in here and it came back to the top of the white area. This is great, and it bounces away from it. So now it came back again right to the white zone, and it gave us again another entry, and so on. Here the same thing. So the idea in here is that, for example, we could sell at the lower part of the white area, which sometimes can be risky because it can reach also to the top of the white zone, okay? So just keep that in mind. So if you sell at the top of the white zone, it is much better because price might reach a little bit higher. Of course, selling closer to the blue zone, it is much better. But let's just say you do enter and price gets out of the white area, right? What if price gets out of the white area? We need to make sure that one, it comes back into the white area. That is very, very important. Let's just say that I enter a sell in here, but price does not come back into the white area, stays above it, and then it starts reaching higher. It is very crucial to see that, to monitor that trade, because it's letting me know that, well, this is acting as a nice support and price is not going to go lower. And then I'm better off just closing this trade and then looking for a better optimal price, okay? So if I see that price now starts to come back in here, now my thing is it needs to break below it, right? So I still need to monitor this trade because I need to make sure that it breaks below the white area and then it keeps on going. Because what if in here it bounces up and then it goes higher, right? So again, those are some of the things that you have to monitor. So in here it came back again to the top, right? It didn't reach the blue zone. And again, we have to make sure that it breaks below it, that it doesn't go above it, because once it goes above it, there are high probabilities that it might go and reach higher time frames, white areas, okay? I will go over that on the next following video. So again, we want to make sure that we enter as close as we can to the white zone. There are times that it never reaches to the top. Sometimes you might just go somewhere, at the beginning or the middle. But always keep in mind that if it closes above it, then you have to be some time extra careful, right? So now that we have the blue zone, right, as a major time frame, as a major guide, as what should we do, right? We want to be able to enter in the zone. We want to be able to sell below it, or the opposite when we're buying. That is our major guide. Now we have these white zones that are going to help us even more in entering the price. And again, we can avoid stupid entries sometimes, right? Even though everything meets, but it's outside of the white area, or sometimes we enter and it just never comes back into the white area. So that's telling me that, it's time to get out. All right, so here I want to show you 15 minutes, okay? This is a 15 minutes, the same day, okay? And this was really good because it was also using 15 minutes, okay, as a entering the market. So it was acting as a nice resistance, right? It was great points to enter when, when we have two or more white zones to enter the market, the stronger it is the pullback, okay? So if this to say, for example, this white area was actually at the bottom. Let's just say it was here. So that means it was trading then in between 5 minutes, which is on top, and then 15 minutes, which is at the bottom. So we really want 5 and 15 minutes to actually be doing the same thing, right? We want price to be in the white area, right, as well, just like 5 minutes or even below it, because this is giving me hints that we're going to keep going into the downward direction, right? That is the idea in here. Now, how are we going to enter in here, okay? I really see that the lower the time frame, once we establish the trend, which I'm going to talk about later on, then it is much better to enter at a lower time frames because we get a better price action. So the idea is that if I know that on 15 minutes we're also on the white zone, right, that we're also testing the blue area, that we're below it, then what I want to do is I have two options of entering. I could enter using M5, okay, price action blocks, okay. Right now they're not showing it, but the way it works is that we make sure that price action is, if we want to sell, we want to make sure, let's say this, you see this white candle, right? This is a bullish candle. We want to wait for a block or a candle that breaks below this bullish candle, and then this will be our entry over here, right? So we could enter here and price will go back again, and eventually we'll start going lower, right? I'm using currently 5 minute and 1 minute block entries, okay? Why is that? Is because I want to be able to grab a better price, because you see, if I wait for this block to happen on 5 minutes, let's say it can give me the entry right over here, which is not bad, right? Because we can grab the rest of it here. But the higher the time frame, the longer it's going to take to make the entry, and we're at a lower price, right? Because if we enter here, the higher we enter at this white area, the better it is for me. Why is that? Because my stop loss could be either somewhere in here or somewhere in here. But if I enter way lower, then I have to give it more room because it can reach up to the high of this white area or the height of this blue zone. So I have to give it way more room for a stop loss. So the higher that you enter, the better it is. So once you analyze all the time frames and you know what direction you should be entering, then use lower time frame alerts, 5 minute and 1 minute, because you want to be able to grab better price. Better price means you can have better risk, meaning that if your entry happens closer to the white area at the top instead of way lower, okay? That is the best option. The other option that I could suggest is waiting for a bearish candle to close when you're entering to sell, obviously, right? Because if we're buying, we want to wait for a bullish candle. So in here, let's just say this is a bearish candle, so I would enter at this candle, right? And then I would just say, well, I'm going to give it up to the blue zone, the top of the blue zone, as a stop loss. And then I have to make sure that, well, it reaches to the bottom of the white area. Of course, if it reaches lower, even better, but it needs to break below it to keep on going lower. That is the best idea. So again, you have better options in here. Again, I do suggest entering on a smaller time frame. Once you analyze everything, it's better off because you're better off grabbing a better price. Because let's say we enter on 15 minutes. Well, the entry for this one, again, could be around here because we take this bullish candle. It needs to break below it. That's price action. So our entry will be somewhere around in here. Then in here, the entry, okay? Could be somewhere around in here, which is again not bad because we're going to be able to grab something in here, right? So if we were waiting for a bearish candle on M15, maybe the entry could be this one, maybe right here for this one. Again, we're trying to grab the best price so that our stop loss is way better, right? Because the lower we enter, then the more room we have to give to that trade to work out. All right, so this is pretty much an introduction on how to use the zones to be able to look for pullback entries. So we have two types of zones. We have the blue one, which is our major zone, okay, the 4-hour zone. And then we have the white ones, which are going to be for each differently for each time frame, which on the next following videos, I'm going to talk about uptrend, just one video on uptrend, downtrend, reversals, okay, and a lot of tips on how to recognize and change when using the white zones, okay? So stay tuned, and I will see you on the next following videos.